Welcome to the Trading Bell. I'm Noakip Kimboy, and today we are focusing on formerly Barclays Bank, now Absa Bank. For the last 1 year, they've been on a journey of rebranding and getting the new colors. What are the lessons from this journey and also the impact of COVID-19 on business? All this, we'll have a conversation with the Managing Director and CEO of Absa Bank, Kenya, Jeremy Awori. But we start with his profile, shall we?
Jeremy Awori is the Managing Director and Chief Executive Officer of Absa Bank Kenya PLC, part of Absa Group Limited, a position he assumed in February 2013. Prior to joining this organization, he held various positions within Standard Chartered Bank, among them CEO of Standard Chartered Tanzania from 2008 to 2012, Regional Sales and Performance Director at SCB Middle East, South Asia and Africa from 2005 to 2008, and Head of Consumer Banking in SCB UAE from 2003 to 2005. He also served in Standard Chartered as the Executive Director and Head of Consumer Banking for East Africa. In addition, Jeremy has lived and worked in the UK, North America and Asia. He completed his master's degree in business administration from McGill University, Montreal, Canada, and holds a Bachelor of Science degree in pharmacy from Manchester University in the United Kingdom.
Welcome to the Trading Bell.
Thank you very much, Noah.
Okay, so 1 year into it, what are the biggest lessons you've learned in this journey?
I think the biggest lesson that business leaders and our business has learned is just being agile, being responsive, and adapting to the situation. When we started 2020, we were working towards our brand launch in February, and then a whole series of external events started affecting what we had planned. The first, we had obviously the sad demise of the former president, and we were in a period of mourning, and we had all our plans to launch during that period. We opted to, out of respect, to shift the launch date. So you can imagine we had to move our rebranding date and all the plans that we had for that out of that period to a more appropriate period. Then we had a really successful launch, which was really exciting. A month after that, we were announcing our first COVID case. So we had a whole series of activities that were planned, which, because of things like the lockdowns and just the general medical realities of the pandemic, we couldn't do. We wanted to go all around the country, we wanted to host events, we wanted to meet customers, we wanted to meet colleagues. That was just not going to be possible. We had campaigns that we had planned. So we had to pivot quickly, and just be responsive to the situation, to the mood, to the context. And that's why what we did is we focused much more on Kenyans and Kenya. What can we do? So that's why we put a lot of our time, effort and focus, number one, on protecting our colleagues, to make sure, because we are frontline workers also, banking services need to be provided throughout this, making sure colleagues were safe, the environment was safe, that the environment was safe for our customers to come in, that our banking services through our online and phone channels were working, and we were proud to have our uptime at 99.8%, almost 100%, because you don't want your channels to go down if you can't go to a branch, right? Yeah. And then we were trying to work with the government through the COVID emergency fund, where we gave 50 million, we gave masks, PPEs, across into the healthcare workers and frontline workers, because we believe we have to protect them, because they protect us in a way.
Yes.
So we had to really pivot that way pretty fast. So a lot of the plans, best laid plans, sometimes don't come to work, but I think we did well through it.
Yes.
And what we learned is it's important that you have to work with your customers and with your people. Because if you think about during COVID, you have a situation where people are losing their jobs. Businesses were not able to operate just due to the control measures that were necessary. And that's why we very quickly we were the first bank to come out with loan restructurings and moratoriums. And we restructured loans for almost 60,000 people worth 62 billion shillings. And it's just to give them a holiday, a repayment holiday, to enable them to focus on paying their salaries, keeping their businesses open. Because if they don't do that, who's going to be able to pay a loan? Yeah, do you know what I mean? So for us, I think we pivoted. We had to accelerate our digital agenda,
Definitely.
which I think was good in a way.
Yes.
And we had to adapt to new ways of working remotely. I mean, now we had 55% of our head office and support functions working remotely.
And people might argue it was almost prophetic for Absa. Before you guys started closing down some of the branches, physical branches, and you're foreseeing this future, relatively present and future, of digital banking, people banking on their phones and remotely.
Yeah.
So far, how is that holding on? Is it a trend that's going to continue moving forward?
Absolutely. I mean, at the end of the day, what do customers want? They want convenience. They want products and services that meet their needs wherever they are. So I think there were a number of people who hadn't made that transition and suddenly were forced to make that transition. Suddenly you realize, I don't remember my PIN for my internet banking, right? And then you have to make a transfer, or you want to make a transfer to your mobile wallet to make payments, or you've forgotten your PIN to your credit card or your debit card, and you don't want to handle cash. So what we did is we tried to provide a lot of support on that front to just help people transition. And now many people are like, I wish I had done this sooner. So that's why I think that transition was going to happen anyway. I think COVID has just accelerated it for various hygiene reasons, and that's why we were investing so much in our systems, and we'll continue to invest in our systems.
Definitely. And recently you put quite a figure into the technology agenda, saying that you're going to do almost 60 products that are geared and are driven by technology in the banking sector. How is this possible and achievable?
Yeah, I mean, to be honest, it's a continuation of what we've done over the last, 3 years. If we think about the last 2 years in particular, we probably did 150 projects in that 2 years. What a lot of people don't realize through the rebranding, we also replaced and upgraded a lot of our system architecture. So every weekend, literally for 2 years, we were doing a system upgrade, and that money is even more than the 1.6 billion that we're talking about. And it just shows our commitment to invest for customers, to invest for a platform that's stable, that will deliver you a consistent customer service, that you can rely on. Because when you're doing transactions, you want to make sure that they work exactly the way you want them to. These new 60 projects are a number of things. They are projects to improve the customer experience and just the usability of platforms. We will add functions to the existing platforms. And then we have some very new and exciting products that are not in place right now that we want to launch that use either mobile or online banking platforms.
Definitely. Now, going into the money aspect of it, we understand the issue of unregulated lending in the country, and you are in this space and you are innovating further. What is in the pipeline for this sector? Because majority of our population actually, they can't collateralize the credit they get from lending institutions. So what are you doing to help propagate healthy but also sort of unregulated lending?
Yeah, I mean, the first thing that Absa does is it wants to make sure it treats its customers fairly and correctly and ethically. So, with our products and services, we want to make sure customers understand what they're buying. They understand the terms and conditions of the product, before they buy and when they're using it. So that's very important. And you touch on unregulated lending. Sometimes what happens with some players is that they're not fully transparent. And I think that's what the central bank quite rightly wants to regulate, because they need to protect customers from being from some of those players if they're taking advantage. And there's things like, for example, data security, confidentiality. What are the systems doing with the data that they're gathering on your phones, for example? So for us as Absa, what we're doing is we launched our Timiza platform, which is it's essentially it's like an online banking platform. You can open an account within a minute on your phone just using your ID. We then can do a credit score review and tell you how much you can borrow on your phone. We then give, if you decide to accept that loan, goes onto a wallet, and there you go. You're able now to to continue. But I think going forward, yes, there needs to be the right regulation to protect customers. I think the banking sector is responding very well with the banking code to make sure that these things are attended to. And we look forward to this because you're right, at the end of the day, the majority of Kenyans don't have collateral. And banks are responding using analytics, using connected systems to make credit decisions that don't require collateral. And that's going to be the artificial intelligence, deep learning, big data. Those are big words that people use, but those are things that are reality as we start thinking about how do we provide credit into the economy, how do we provide credit to Kenyans who don't have security, and that's a place Absa is going to be spending quite a bit of time on.
The micro, small and medium-sized enterprises are actually the engine behind the Kenyan economy. And one of the gaps has always been credit for this sector. How proactive are you in that sector?
I think we're probably one of the most proactive banks in this. And why do I say it? I think when we look at it, I don't think credit is the only problem. People want to simplify that it's a credit problem. I think there's a multiplicity to the challenges that SMEs face. And I think what we need to do is, working with government, we need to address some of those, like just making it simple to open a business. And I think we've seen a lot of movement around how easy it is to open on eCitizen, to set up a company, etc. So I think those are positive ticks. But we need to make the business of being compliant, the licenses that a business needs to get to be easy and to be integrated in a digital manner. Credit is definitely one of the aspects that we need to look at. And I think banks like ourselves are looking at how can we provide that credit. What we did a number of years ago is we moved away from an approach which was typical, where you were using audited accounts. So you tell a businessman, bring 3 years of audited accounts. In all reality, most businesses don't keep audited accounts. So that was the entry barrier straight away. So we removed that and we said, look, we're going to use your bank transactions, maybe your M-Pesa transactions, to be able to assess how much credit you would qualify for. That's without security. We can analyze the money going in and the money going out and see what you can afford to pay. We've also launched, we had a Wezesha Biashara campaign, and we've got amongst the highest unsecured limits. Today you can borrow up to 10 million shillings unsecured. We do up to 50 million shillings in invoice discounting, so that you can get faster value. Because the biggest challenge for businesses now is cash flow. Yeah, they just don't have enough cash flow, and they can't invest in their stock or the equipment that they need to run their business. So we're very much open. We've got programs that support women in business. We've partnered with ITC to take 10,000 women-run businesses international. And we train them. We've done over 5,000 so far. To help them. How do they explore those international opportunities, either to export or to import? How do they build their skills to run their business? So we're very much committed to the SME sector and look forward to growing and participating in it in the future.
Definitely. And you've mentioned the international market, just thinking of the Africa Continental Free Trade Area and the potential that it holds. You've mentioned what Absa is playing, but the overall financial sector in making Kenyan businesses competitive on an African continent basis. Is there more tenets that we could work on to ensure that happens?
Yeah, I mean, absolutely. There's always opportunity to improve. I think obviously right now with the COVID environment, which has had implications on trade and whether borders are open or not, it's been a bit more challenging. But I think the governments are working together to try and make it easy for businesses to work across borders. I think there's still huge opportunity even within Kenya to support businesses to grow and to support businesses to come through this pandemic, because that's the most important thing, that they come through the pandemic okay on the other side. in order to provide goods and services. And I think there's huge opportunity for us to produce goods and provide services that where currently we might be importing.
Yes.
Yeah, we need to add value to those products. So before we export them, we keep more of the value here. We employ more Kenyans.
Yes.
And we grow our GDP. So I think there's huge opportunities within Kenya and also across the borders within East and Central Africa and even the rest of Africa.
Definitely. Your bank has been, it takes that first step, normally an industry lead. Back in '86, now you open up, people can buy stocks into the bank. In 2017, you introduce the new gold ETF. And during the pandemic period, for this particular product to be specific, we've seen a lot of people shift to gold. Explain to us the logic behind that. And now we are talking matters vaccines. Will we see the reversal of that and more confidence where people will spread into other products in the market, or will this gold situation continue?
Yeah, I mean, I think the reason that we saw some of these shifts was when the pandemic was announced. We saw a lot of measures taken by governments, closing their borders, putting in place lockdown measures, which really in the first instance started affecting international trade, because if airports are closed, ports are closed, goods cannot move across. Yeah, so then it started becoming a macroeconomic issue with macroeconomic implications, which then one of the areas that's affected is things like stocks. Yeah, obviously equities, foreign exchange levels. So because there was so much uncertainty, typically in environments of uncertainty, people go to safe haven assets, and gold is normally one of those assets. And through our gold exchange traded fund, where essentially what you can do is buy, without buying physical gold, you can buy a share of a fund that buys gold. Okay. You get the benefit of the price rise. And because people moved to buy gold, buy our ETF and to buy gold, we saw the gold prices rising, and it was one of the best performing securities that you could invest on in our NSE index. So going forward, there's still a level of uncertainty. People still will hold a portion of their investable assets in gold until we're really out the other side of this pandemic. Yes, we've got the vaccine, but there's still a lot of logistics associated with the vaccine.
Yes.
Countries are all trying to buy the vaccine for their populations. Will there be enough? We've seen what's happened with the new variants of COVID. So it's still a little bit early days. And which way the markets will go is still a little bit uncertain, even though we are definitely more optimistic now that the vaccine is coming, and we hope it comes to Kenya soon.
Yes.
And gets rolled out soon.
Definitely. Vaccine was certainly an injection of hope across
true.
the world.
Yeah.
We've seen a lot of confidence around that. Now, as we finish up, the Absa Financial Markets Index 2020, there were quite some pointers. Kenya slipped a little bit in some aspects and still a lead in some aspects. And we've seen, sort of the pandemic has been a leveling ground for almost the globe at large. Now moving into the year 2021, for us as a market, as a financial market in Kenya, what do we need to work on to be at a better position?
Yeah, I mean, I think the thing that the Africa Financial Markets Index showed is there's certain pillars that if you focus on those tend to lead to better economic progress and progress for the country at large and its citizens. So in there's things like your macroeconomic factors. There's things like market depth. There's things like financial market depth. There's the issue of the regulatory and tax environment. Yeah. There's the issue of the access of investable funds through things like pension funds and the depth of those markets. So there's a series of those pillars that if one sort of structurally looks at can help you move up the index. So last year what we saw was a number of other countries were moving forward a little bit faster than Kenya. So it wasn't that Kenya wasn't moving forward, but everything is relative. Yeah?
Okay.
So that's why you found maybe the position slipped slightly. I think we just need to continue doing what is right within the economy. So the kinds of things we need to look at is a continued focus on macroeconomic stability and measures that would encourage growth. I think putting in place regulations that not just protect investors, protect customers, but also create an conducive environment for foreign direct investment. We also need to look at some of the investable assets and various security classes that investors would want to invest in. And I think the Capital Markets Authority is looking at that. There are various hedging solutions that will help international investors hedge out some of their risks. Yeah, you know, and standardized documentation like the ISDA documentation when you're doing, you know, various option documents on the financial markets. I think once you start standardizing those, then international investors feel that you're more closely aligned with international markets. So I think the central bank and the Capital Markets Authority, the NSE, are trying to make it easier, you know, and better through the capital markets plan. I think the macros are being managed, you know, and we hope that those pick up. And I think part of it is also going to be sentiment. It'll be a very interesting index at the end of this year.
Definitely.
Because COVID has really
ravaged a lot.
Yeah, it's impacted. And I think Kenya, you know, to its credit, has held up quite well relative to many of the other markets. We can thank God for that.
Yes, definitely. And even in that whole point, the boosting of the capacity of the local investors, that was one of also, you know, the focus of the index, not only foreign investors but local investors.
Exactly.
How could we spur that?
Yeah, I mean, I think people need to you know, there's the choice around whether they see Kenya as an exciting destination to hold their assets, and that includes Kenyans. Yeah, I mean, when you look at wealthy Kenyans, because the reality is that wealthy Kenyans have the ability to invest in Kenya. If they are confident that they're going to get a better return or a safer return than they would outside, it's in their interest. It will be a natural choice for them to say, let me invest here in Kenya. And I think that's why I'm saying we need to create an overall environment of relative predictability and stability. If you have yo-yoing exchange rates, of course, that's going to make people a little bit tentative, because people also want to hedge out their risk. And I think we've been good at managing that as a whole. So I think we need to also look at the range of asset classes, securities that people can invest in. And I think as more of those come in, then you'll find more Kenyans and Kenyan businesses investing here, you know, in the country and building and growing the country. So we don't have to necessarily rely on just foreign direct investment from outside.
Definitely. Thank you very much, sir, for your time.
Well, that has been Absa's journey for 1 year since rebranding and the projections for the year 2021. Thank you very much for watching The Trading Bell. I'm Kenyans. See you next time.